will they go? After 4 years of interest rate hikes, the feds are finally projected to lower interest rates in September. And there are many factors that could impact your finances. Joining us to highlight just a few of those factors, want to say hello to our Alpha Money expert, Mike Koinen with Principal Preservation Services, who joins us again this month. Yeah. Mike, great to see you. Thanks for being here.
Yeah, great seeing you, and always a pleasure to be on Alpha News.
You say to first look out for economic and stock market impacts on this news, Mike.
Yeah, with the rates coming down, it's going to help businesses with lower interest rates, expansion, for consumers, also for lower interest rates. So they're going to be spending more, which stimulates the economy. And when we look at that, typically, not always, but typically with interest rates coming down, it does positively affect the stock market. So we're looking forward to that. And there's some anticipation with that, with not just one, hopefully in September, but later this year as well. When it comes to the bond market, though, we're finally going to hopefully start getting some of your money back because with 11 rate hikes, bonds are inversely related to interest rate hikes. So when they went up 11 times, you kept losing money in your bonds. But now with rates coming back down, bonds are going to values start increasing. And one of the tickers I look at, the bond tickers, it's a bond index, U.S. Aggregate Bond Index, AGGY ticker, it's still down almost 16% over the last 5 years. And people didn't think they could lose that type of money in the bonds, but you can. And they're still down, and hopefully we can slowly recover and get your money back.
For anyone in the housing market, it sounds like some good and bad news there.
Yeah, good news is rates are coming down. When we chatted a few months ago, I think the average 30-year mortgage rate was a little over 7. Today, it's about 6.5. So about 0.5% lower, which is great. But also the negative side of it is causing more interest in the market, which drives up prices, more demand. So we're starting to see housing prices increase. We're seeing more houses getting listed. With children in my family, they're finally looking to buy a house because rates are down, but there's not a lot of great in that starter home price, unfortunately, because prices are going up fast.
If you have some money in savings, you may want to lock in now. And there's also debt relief to be looking at here.
Yeah, I think it's important, especially for those retirees who are risk adverse and they don't want to have that money in the market these days. They've been past that market risk and they want to have money safe, and they're counting on some safe interest coming from the bank, CDs, high yield savings, maybe even a fixed annuity at a flat fixed rate. Now's the time to lock up some better rates in those CDs and fixed annuities, because you could still get in those 5s if you lock it up soon before the rates start dropping by the feds. So now's the time to do that. When it comes to debt relief, it's important to start looking at those high interest rates. Maybe it's a credit card, with those high rates, those are going to slowly start coming down, but maybe do a debt consolidation at a lower fixed rate. Get out of that debt. Those federal student loan rates are pretty high. If you go to a private loan, you can get rates right around 5%, save you a bunch of money, get those loans paid off quick. Unfortunately, on the car loans, they're going to slowly come down as well, but the average, I looked it up today, the average loan on a car, about $35,000 on a 5-year. If they drop 0.25%, it's only going to save you $4 a month. We have a ways to go to start saving money on refinancing a car loan. I just recommend don't use your home equity line of credit to pay off credit cards or to do things like these unsecured loans. I just seen a problem. If you have credit cards maxed out, we see these credit cards get used again and again and again. Now you have a home equity line maxed and credit cards maxed. You don't want to have that problem.
Our Alpha Money expert with Principal Preservation Services, Mike Koinen. Great to see you. Thank you.
Good seeing you, Liz. Thank you.